Oil prices are dropping. USO stock and XLE stock, which is both the ETF for energy and the energy sector, respectively, are falling. This is something I covered just last week. I wanted to keep going with this because higher for longer, the mantra. We may not exactly be sitting there for eternity. Eventually, the Federal Reserve will lower interest rates, but for now, this is having an effect on oil. With oil falling, you're probably going to see more continuation with increases in supply, decrease in demand, and from that, USO stock will fall along with oil as well. XLE stock, the energy sector ETF, will fall because profits for these companies are going to start declining as they initiate price wars to gain as much revenue as they can. Let's jump in. I want to show you a couple charts. If you're just joining me, thanks so much. This is my new channel, breakaway channel from my original channel. Make sure to hit that like and follow button. Really appreciate the growth that I've seen since I've launched this just about a week and a half ago. Also, descriptions down below. Make sure you click on the links there because I have my other channels. Also, I have my website, dhtayloranalysis.com, which will get you to the free email newsletter every time I send out content. Every time I put content together, I send out an email letting you know what I've done. That keeps you in touch. Now, looking at oil prices, and I touched on this about 2 weeks ago and last week, looking at what's going on with energy. We've seen a bunch of movements with energy prices, and I actually think we're probably going to be topping out. We probably topped out mid-October when we hit about $95. I thought that was a bit high. I didn't expect any kind of follow through from that because I didn't see any sort of fundamental reason for it to do so. With higher for longer, consider what that means for the broader economy. The Federal Reserve is trying to contract inflation. Price pressures are too much, so therefore they're going to leave interest rates as high as they can for as long as they can until they start to see inflation drop down to the 2% growth rate. That will affect a lot of these, especially say the energy sector in general, because higher interest rates mean higher costs. This is a capital intensive industry. And I've got a couple charts here. First, this is WTI, West Texas Intermediate. Here is WTI crude oil versus USO stock. USO stock is an energy ETF that follows oil as best it can. And if you look at the orange chart there, that's pretty accurate. So if you actually have an opinion as to what you think is going to happen with energy, USO stock is a great way to go. USO stock, I mean, it follows it almost to a T. I expect that with the economy, with higher interest rates, you're going to start seeing employment numbers decline. That means contraction for people driving. The economy, broadly speaking, will contract somewhat. We're still hoping for a soft landing from the Federal Reserve, but I just am not in that park right now. We'll see how economic data progresses throughout the next, say, 3 to 5 months, 6 months or so. I believe the Federal Reserve is probably going to have to raise interest rates a couple more times, maybe push the short-term rate up to about 6.25, maybe even 6.5 to contract the inflation rate. They're going to have to contract employment. We're at 3.8%. This is some of the strongest employment we've seen in our nation in 60 years. That's a little too much, actually. That frictionless movement with employment means that people can continually demand higher and higher wages to keep up with inflation. Totally understand that. But inflation, that pressure is too high. We need incomes to kind of get up to those levels where they moderate with growth. But with employment at 3.8%, broadly speaking, the economy is just a little too strong. A little too strong. So I expect supplies for oil to increase. And because of that, I expect oil prices to go down. So you'll see USO stock move lower. You'll also see XLE stock, which is the energy sector, which uses oil and other energy products. Their profits will start to dwindle. Interest rates are going to tap into XLE's costs as well. And here's a look at West Texas Intermediate crude oil versus XLE stock. XLE stock, the entire energy sector, keeps a pretty good pace with the price of oil. It is not a one-for-one correspondence there. You'll see variations that XLE stock itself, based on profits, kind of travels in a narrower band, that you'll see oil prices kind of whip around quickly, and they will these energy companies are going to buy and sell and hedge their positions, but their profits don't really shoot up nearly as much as, say, oil prices do in a small period of time. So XLE stock, I expect, will move lower, but not at the same pace as oil for now. Eventually, however, things are going to kind of get out of control. If oil starts to drop below, say, 75, getting down to maybe $60 a barrel, that will really affect XLE stock overall broadly, especially if it's in conjunction with interest rates that continue higher and higher for a longer period of time. Eventually, the Federal Reserve is going to raise interest rates, probably at the end of this year, probably a couple times in the springtime. But how long do they keep interest rates higher for longer? Because at that point, you can start looking at XLE stock and buy into the energy sector. Once supply has dwindled, once these companies start, they're done cutting their costs. But that's the moment that you want to start kind of targeting as to when can you buy into XLE stock, the energy sector, and really take advantage of the economy moving back upward. For now, I see XLE stock going lower, and I will see that probably over the next couple months, given the information we have right now. We have new information coming Thursday and Friday. It's a continuation story. There isn't just one event. It's a whole process. Make sure to hit that like and follow button. Follow the links to my other channels and as well my website, and get the free email newsletter. We'll see you in the next video.